Alright, ladies and gentlemen, MrSotko here. Welcome to the channel. Welcome to the best, most realistic investing tips for your cryptocurrency. Of course, I'm recording at night again, so I'm as pale as a ghost, but oh well, looking aside that, let's talk about the best ways to go about it, objectively, neutrally, if you will. And so to do that, I think I need to start with a little bit of hindsight, and everybody's sort of kicking themselves in the rear for not getting into Bitcoin 10 years ago, or rather 8 years ago or something like that, or in 2013. As you can see, the price is super low. If you had bought in all the way back then, you'd have quite a bit of money today. So now that's sort of a duh, hindsight is 2020 sort of situation, but what can we learn from that? What was it exactly that if you were to have bought all the way back here and then sold it at the very high price that it is today, what is it about that? And of course, it was just holding on to it. It wasn't trading it around. It wasn't really doing much of anything, just sitting and holding. So I've kind of got a list of bullet point tips here to talk about that I wrote down that I thought are just some of the things that I have learned, and just some general good advice without any of the fluff in between, if you will. So I know a lot of my videos lately have been very negative, sort of fuddy, if you will, maybe a little bit of drama in there, some of that souse, some of that finger licking good. But I'd say that there has been some positivity in cryptocurrency lately, but it's vastly overshadowed by the negativity. But don't worry about that negativity. Just know that a lot of my negative-oriented FUD videos are really just a warning to you guys and what not to do in a particular situation. So I first learned about Bitcoin in about 2013 when it was nearly $1,000, just before the Mount Gox or Gox or whatever they call it incident in which everybody lost their coins. And I remember thinking to myself, why would anybody invest in this digital currency? Aren't there already digital currencies? Maybe I didn't really understand it. And it was many years ago, so it's to be expected, I suppose. And I suppose in that regard, a lot of people didn't understand it. Otherwise, we would have a lot more millionaires today. But I seen it in 2013, and then it crashed, and I thought, man, all those people lost a lot of money. And how wrong was I thinking that Bitcoin was sort of a joke all the way back then? Now, something I want to talk about is just holding. And of course, you might be thinking, I've made a lot of videos on day trading, and so let me talk about that first. Day trading is very fun, and it can be more profitable than sitting and holding. So for example, let's say that one day at midnight, Bitcoin was at $1,000 as a hypothetical example. And then by midnight the next day, so just 24 hours essentially, it was going to be $2,000. So if you had held it, you would make $1,000. So that's all good. But what if during that day, in the middle of that day, it went to $1,500 and then dipped back down to $1,200? So you sold it at $1,500, you rebought it at $1,200, then at the end of the day, you sold it at $2,000. You would have made more money. Now, that's all fine and dandy, but for most people, that's just simply not feasible. You can't be around your computer 24/7. People have lives. I mean, you got to go to work. You got to deal with the kids. You got to do this, that. You got to sleep. And then when you're day trading, a lot of the time, you may miss those dips. You may miss or sell too early, and then the price just keeps rising. So to a lot of people, it's just not feasible. When it comes to day trading, you have to do it near perfectly to make more profit than just holding it. So for a lot of people, that's just not really something that they can really invest all their time in doing. And pardon me, but I know I'm clearing my throat a lot, but I think I'm getting sick. My little boy was sick, my wife was sick, and now I think it's my turn, so it's the whole family routine. So just holding is pretty much the best way to go about doing it. And I know everybody's looking for that fast cash. Everybody's looking to go out and invest in all these different ways. And I've certainly tried my own ways. I've tried to invest in this, that, the other thing. And none of them are really as good as either just simply day trading if you can, or simply as easy as holding on to your coin and not selling. Just hold it for a long time. And you might think to yourself, well, when do I sell it? And that question, unfortunately, is entirely answered by you. So you need to set yourself a goal. So that's another bullet point of mine, is you need to set a goal. Like, what is your goal? Do you want to hold it onto it for 5 years or 10 years? Do you want to hold on to it till after you have a baby? Do you want to hold on to it until you get married and so you can buy a house? Something like that. You really need to figure out what you want to do with your coin, and it needs to be a long-term situation, because I know everybody wants to get rich right now, and you might be young, you might be 20, 22 years old or something like that, and you just need the money now. But really, as you grow older, you're going to need the money more and more later on in life. And I know it's a little bit funny to probably some of my older viewers, but you guys know just as much as I do that the longer your life goes on, the more bills, the more things that you're juggling. So just know that by holding onto your coin, you can still achieve something like this. It might be a little too late to make yourself a multi-millionaire, unlike grabbing it in 2010 or 12 or something like that. But it will still make you a lot of money. And it's just the easiest practice, and pretty much one of the best practices indeed. Another thing is to diversify. So if we take a look at the market capitalizations here on CoinMarketCap, you can see a ton of different coins. And of course, most of you already know that a ton of other coins exist. And I'm not trying to teach the fact that other coins exist, but I do want to bring that up to everyone, that all these different coins, if you grabbed a bunch of these top coins here, maybe you can only afford $100 in each coin, and that's fine, because they all drop and rise at different rates. Now, a lot of the times the market, as you can see, is pretty similar. As you can see Bitcoin dropping, you can see Ethereum dropping, and they all kind of flow together, but they do still have their own rates at which they drop. It looks similar on paper, but from day to day, they can vary quite a lot. And so if you had bought $100 of these top coins, or the top 20 coins or something like that, invested a couple grand or something like that, and 5 or 6 years go by, you're going to probably have quite the portfolio going on by then. And I'm not saying $2,000 is going to make you a millionaire. I'm not saying it's going to make you insanely rich, but you might double, triple, quadruple your money, at least within a few years. And by the way things have been going, it might be a lot more than that. As you can see, just a year ago, if we look 1 year ago, you can see that Bitcoin was only about $900. And now it's nearly $20,000, or was nearly $20,000. It's dropping down to 10 now. It's in a bad place, cryptocurrency right now. There's a lot of bad news coming out. There's a lot of bad things happening. But one thing we have to look at is this long chart. Even though you see that it's down by $10,000, it used to be $20,000. Just take a look at this chart, and it has risen at least 10 times its value, over 10 times its value in 1 year. So investing a couple grand now, and if the same thing happens again in 1 year, and you tenfold your money, you're going to be looking at $20,000+ by the time a year comes around. Hopefully, of course. So definitely want to diversify. You don't want to have all your funds in one basket. If you went into any investor's office and you just kicked open the door of an Edward Jones and said, "I'd like to invest all my money in mutual stock," they're not going to give you all of one package. And if your investor tries to just put it all in one package, or tell you, yeah, you should get a $20,000 bond and that's it, then they're probably a really bad investor. So that's just not going to happen. Any trained investor knows to diversify, and because it saves you when one goes down, you're still holding high onto the others, that sort of thing. It keeps you afloat when bad things happen. And so another thing is just learn from your mistakes. Everybody's going to try different things with their crypto coin, and you're going to try maybe switch into a different coin and making money with that. You're going to try these different things, and once in a while, you'll make a bad trade and you lost a few bucks. Or maybe you panicked and you sold early, or you bought too late, something like that, you need to take into consideration, what did I do? And you need to take responsibility for that. In the same way that trying to learn anything, you know, if you play online video games and you play in a game with other players, and then you guys all lose, your team loses, and everybody complains and starts ripping on some person, well, then they're not really taking responsibility for how poorly they played or what they did. And that kind of is the same thing with any kind of sport, any kind of task you need to learn. If you're sitting there going, oh, I can't learn this because of blah, 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 you're not going to learn at all. You need to go, I messed up, and take that responsibility and fix it next time. Don't do the same thing. And I know that's a pretty broad example, but it's certainly a very, very good example. Another one I have is just invest a little at first. It doesn't take much. It doesn't take much to get hooked and to have some fun. And if you lose something, it's not too bad. Not a big deal. But if you just straight up invest all of your money at once without doing your research, so that's another thing. That's sort of invest a little bit and do your research, I would say is in the same category. It's one of the same thing. So you can't just say, oh, I saw Bitcoin in a video, now I'm going to buy into it. You need to do your own research. And by now, there's plenty of research out there to look up about any crypto coin and things like that. Especially if you're going to get into an ICO or a brand new crypto coin, you really need to do your research on it and come to a conclusion at the end, and then go from there. So everything is on you in the investing world. It's all on you to some degree. When it comes to Crypto Nick, and not warning everybody that BitConnect was definitely a scheme that was going to fall sooner or later. But either way, you should always put it on yourself and just invest a little at first. And then if you seem to be doing good, then invest more. So I've had a lot of people on my channel that say, hey, I invested $100 into Bitcoin or Litecoin, and I made a trade because I watched your video on how to do day trading, and I made $2. And you might think to yourself, oh, $2, like what kind of, you know, that was almost a waste of time. But if you think about it, that means you did something correct. That means you did well. If you made money on your money, then you're doing the right thing. Even if you only made $1 or $2, you know you're doing the right thing. And if you had invested more into it, and you keep investing more and more into it, and you keep doing that little tiny right thing, you're going to make money in the end. So start little and then go from there. Another important point is don't be first or last. And I know in a lot of ways, this is true and this is untrue. So let's take this into consideration and chat about that a little bit. So don't be the first. Now, in some ways, especially when it comes to ICOs and brand new coins, brand new things coming out, being the first is a good thing, because if you can get on that coin and the price skyrockets from there, you got in at the absolute lowest price, then of course you're going to make a lot of money. However, the majority of people who just dive into things and are the first to dive into things are the first to lose, essentially. And the few lucky people who picked their lucky coin, if you will, as an ICO or a brand new coin that came out, then of course those are just lucky people, and that's a small majority. It's just a fraction of the entirety of the people investing. So be careful with that. Always do your research and maybe give it a couple days. Maybe if you see a brand new ICO coming out, maybe you watched a video for it, maybe you looked it up on ICO Alert or the various other ICO sites, and you're like, man, I'm going to invest in this. I think this one's going to go up. Maybe give it a couple days. Maybe wait a couple days into the ICO, because it could be a scam coin. There was a scam coin, I believe it was called Nox Coin. It was an ICO, and a bunch of people dumped a bunch of money into it. In a few days into the ICO, it just disappeared. Poof! All their social media disappeared. Everything about it just disappeared, basically. And so a lot of people lost their money. So if you had just waited a few days into that ICO for others, and yeah, sure, other people are going to make a little bit more money if it's a good ICO. But if it's a really bad ICO, you didn't lose anything because you waited just a few days. And of course, don't be last either. You don't want to be the last to sell, because obviously if you're the last to sell, then you're probably selling it at a very low price. And we can extrapolate and use our imaginations from there. Another thing I want to talk about is dollar cost averaging. Now, DCA investing is a very important thing. There's two major forms of investing that I would like to talk about. And one is lump sum investing, meaning you're just going to dump a whole bunch of money into it and then wait, or dollar cost averaging. And there's a sort of an ongoing debate about either one. Which one's better? Which one makes more money? And what I'm going to recommend to you is dollar cost averaging. Now, I came across this really great site, and I actually wanted to. I had my own little notepad here, and I wanted to make some numbers up and write some things down for dollar cost averaging. But then I came across this site that just did it for me. So I'll just show you this one instead. So dollar cost averaging is an investment technique of buying a fixed dollar amount of a particular investment on a regular schedule, regardless of the share price. The investor purchases more shares when the prices are low, and fewer shares, of course, when the prices are high. So if the price is really low and you invest 50 bucks, of course you're going to get more of it because the price was lower. And if the price was really high and you invest 50 bucks, of course you're going to get less of it because the price is high. So a fixed amount. So for example, assume an investor invests $1,000 on the first of each month into mutual fund XYZ, or in this case, cryptocurrency. Assume that over a period of 5 months, the share price of this said crypto on the beginning of each month was as follows, excuse me. So imagine this is a cryptocurrency, and this crypto was at $20, and it was at 16 and 12 the next month, and then 17 and then 23. So on the first of each month, by investing $1,000, the investor can buy a share equal to 1,000 divided by the share in the price. So if it was $20, he bought 50 shares, he or she, excuse me. But either way, in this month, he or she bought 62, he bought 83, 58, 43, by dividing how much he invested by the cost of the crypto that month. And so regardless of how many shares the 1,000 monthly investment purchased, the total number of shares the investor owns is $298, and the total number of shares is 298.14. And the average price paid for each one of those shares was $16.77. So if he invested $5,000, it's now $6,857 after 5 months for just investing $5,000. So that's dollar cost averaging. So to put that on a level that you guys might understand a little bit better, as an example, just if you have $100, just every week, maybe when you get paid, maybe you get paid bi-weekly, like most people, and you put in $100 every paycheck, no matter what the price is of Bitcoin, you just $100, and so that's a pretty steady, mathematically proven to be pretty good, unless of course the price crashes and never comes back up. Then everybody's screwed at that point. So then there's the other one. There's lump sum investment, and that is exactly what you think it is, lump sum investment. So I think this actually talks about it as well. And I'm not sure if it gets into lump sum on this. But oh yeah, if the investor had invested all 5,000, sorry, I don't have my glasses on when I record because they're just like this glare and blinding everybody. So if the investor had invested all 5,000 on one of those days instead of spreading it out, the investment across 5 months, the total profitability of his position would be higher or lower than 68.57, depending on the month chosen for the investment. So if he chose to dump $5,000 on this month when it was $23 a share, it would have been much less than 68.57. And if he had done it on this month, it would be much more than 68.57. So when it comes to a lump sum, like let's say you have $10,000 and you just say, today's the day I'm going to invest in Bitcoin, and you just did it. And you didn't really wait for a super low point You would then have to wait until the price gets much higher, and then you would make so much depending on how much the price varied, which is okay as well. So take this into consideration and think about lump sum, think about DCA. The problem with lump sum is as what I just said, but the big problem with it is that most people don't have a lump sum to put down right away. I mean, how many people watching this have $10,000 that they're just going to dump right away? Maybe some of you, probably not most of you. And that's not anything to be ashamed of. It's just you just don't have $10,000 to just willy-nilly throw onto Bitcoin. And so dollar cost averaging is a pretty safe method to go about your investment. Another one is to avoid schemes. And what do I mean by schemes? Well, first of all, BitConnect. And maybe you don't know what a scheme is. Maybe you didn't know that BitConnect would be a scheme. And so there's a lot of investing coins that are probably going to go under. So I personally have some of my money invested into an investment coin. And my plan is to just essentially get my money and then get out as soon as possible with a little bit of profit. And hopefully I can do that. And this is where it comes into don't be last. Don't be first or last. So in this case, you would want to be first in one of the investment coins because it will take them a little while to actually go under for the amount of people to come into the pyramid, and then they can't actually physically pay out all of those people that are coming into the pyramid. So if you did get into BitConnect early and then got out, you could have made profit. So it's not the fact that it's a complete scam, it's a functional scam in the sense that it will make you money. It does work, but eventually it will collapse because mathematically you cannot continue adding 1% interest daily when millions and millions and millions of dollars are pouring in. It just can't be done. Eventually they're going to have to be paying out billions, and then eventually they're going to have to be paying out trillions. And I know that's really ridiculous to hear, trillions, but after a few years of that going on with millions being poured in and 1% interest daily, it's mathematically impossible. And I really hate to break anybody's heart on that, like with BitConnect or Diversify or anything like that. It will go down. So if you're investing in any of those, just get out as soon as you can, in my opinion. And so these schemes are, in a sense, when everybody's jumping onto the same thing and it's saying you can get interest every day or you can just sit there and make money on your coins other than staking, because there is such a thing as proof of work and proof of staking. So staking is a real legitimate thing. But the investment getting 1% interest back daily, it's just not going to happen. Mathematically, cannot be done. And so my last one is that the early investors do win, but again, you have to be safe about it. So what I mean by early is not necessarily always first. Now, there's a lot of people making money off of ICOs and these brand new cryptocurrencies coming out. But the problem with them is that there's so many of them coming out. And all you have to do is just take a look at ICO alert or just type in ICOs in Google, and you're going to get numerous websites that are showing all these new ICOs coming out. And it's unsustainable in the sense that not all of them are going to be winners. It's almost a lottery at this point. Excuse me. Oh, the sickness is coming on. I can feel my throat. But it's almost like a lottery at this point. And you really, really need to do as deep research as possible about these ICO coins. And what I would do, what I highly recommend to all of you is to never be first. As soon as that countdown comes down on an ICO website and you're able to put in your Bitcoin and start getting those coins, even if you're going to get a small discount for those coins because you invest so early, what I recommend is waiting a few days, because that's usually when people start to realize something is a scam and that they're not getting their Bitcoin, or it's not transferring over, or they're not getting what they paid for. And then you'll know not to invest in that because it's clearly a scam. So I know a lot of you watching this have probably made some money with ICO coins, and you were one of the first to invest. And congratulations to you. That's really all good. Honestly, I really, if that's what you want to do, and if that's what's putting steak on your dinner table, then go ahead. All the power to you. But as a safe method, in terms of statistical safeness, I suppose, just wait a few days for these ICOs. And there's no real way to just make millions of dollars right away. It's just not going to happen. The only people that do that is Crypto Nick, because because of all of his referral links and various other YouTubers and stuff. And I've certainly not made my millions of dollars just yet, but who knows, I guess. But either way, I'm kidding. I'm kidding. But so all of these are just about as honest and realistic, objective as it gets. And I know none of these investment bullet points and tips that I gave you are very exciting. None of you are probably like, wow, 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 I never thought of that. I can't wait to go out and make money. But what I'm telling you guys is that there is no way to just go out and make a ton of money right away without some kind of consequence. And some people might have gotten onto Bitcoin or BitConnect, excuse me, or some of these other lending sites or some of these other ICOs that ended up exploding and then collapsing. And then they made money because they got out before it ever collapsed, and they were just lucky enough to get out and be good with what they invested and get out. And don't invest in any sites that hold onto your coin for a long time. Now, Diversify does that with their coin, and I think Diversify will last a little while. Now, don't get me wrong. I'm not defending Diversify in any way, but I think they will last a while. I believe they're French, so it might last a little while. It might take a while for the U.S. government to start cracking down on it, if you will, but I think they will eventually. Is that going to be months? Is that going to be a year like BitConnect? I couldn't really tell you for sure, but what I recommend is just avoiding that completely. And the best way to go about doing it, the most boring way, but the most proven statistical way to go about doing it is just buy a bunch of Bitcoin, use DCA to invest, and just every time you get paid, maybe just put down 50, 100 bucks, depending on how much you make and how much you can afford. And just do that every paycheck or every month, and eventually you will accumulate your wealth, and it will be a slow process, but the patient investor is always the best investor. So I hope you guys enjoyed this video, and there is a secret link to an unlisted video. I took a ride today, and some beautiful scenery in that, and it's just an unlisted video. Check it out in the comments, but as usual, I will see you guys next time.